Many people spend their entire lives working hard, saving money, and still end up with nothing meaningful at retirement. What if I told you that even a person who invests just a few thousand rupees a month could end up wealthier than someone earning 5 times more? The truth is simple. You don't become rich by working harder. You become rich by letting your money work for you through something called index funds. An index fund is simply a group of top companies combined into one basket, so you don't have to pick individual stocks. Instead of selecting winners manually, you buy a small portion of all the best companies together. This means your risk becomes lower, your chances of growth become higher, and your investing becomes easier. Picking stocks feels exciting, but the reality is that most beginners lose money because they don't know what they're doing. Index funds remove that stress by giving you automatic diversification, meaning your money is spread across many companies. When one company falls, another rises, and the overall basket keeps moving upward over time. If you ever felt scared of losing money, overwhelmed by financial terms, or confused by too many opinions, this is the part that will finally make investing clear. Because the real reason most people fail at investing is not lack of money, it's lack of guidance. And once you learn what I'm about to show you, you'll realize that building wealth is way simpler than you imagined. Index funds grow because the companies inside them grow, innovate, and increase in value over time. When the overall market rises, your index fund rises with it, without you needing to do anything. You also receive dividends from the companies inside the fund, which adds to your total returns. Most professional investors fail to beat index funds, even with years of experience and expensive research tools. That is why famous investors like Warren Buffett advise normal people to invest in index funds instead of picking stocks. Index funds follow the logic that slow, steady, consistent growth wins over risky bets. If you are someone who struggles to save money, spends emotionally, or invests based on random guesses, you are not alone. Human behavior often stops people from building wealth even when they want to. Index funds fix this by allowing you to invest automatically without relying on mood or motivation. Compounding is the process where your money grows, and then that growth also grows, creating a snowball effect. Even small monthly amounts can grow into large amounts because time does the heavy lifting. The earlier you start, the bigger your snowball becomes. You don't need a big salary, large savings, or special financial knowledge to begin. Most people can start with a very small monthly amount, depending on their country and platform. The key is consistency, not perfection or big numbers. Have you ever wondered why some people with normal incomes end up financially secure while others remain stressed forever? The difference is not luck. It's the quiet habit of investing regularly in simple tools like index funds. And the next chapter explains exactly how people use these funds to create stable wealth. One of the easiest ways to invest in index funds is through a systematic investment plan. This means you choose a fixed amount every month, and it is invested automatically. This removes emotional decisions and turns investing into a peaceful routine. Markets rise and fall, but over decades, they always grow in the long run. Index funds protect you from panic because the basket of companies adjusts over time. Instead of checking prices daily, you focus on staying invested for years. Sometimes your biggest enemy is not the market, but your own fear. People pull out money when markets fall, even though that is when they should stay calm and continue investing. Index funds protect you from that behavior by encouraging long-term thinking. Index funds are built for long-term growth, not quick profits. If you stay invested for several years, the ups and downs balance out. Most people who stay invested for 10 or more years make positive returns. Every fund has small fees, but index funds usually have the lowest fees because they don't need active managers. Lower fees mean more profit stays in your pocket instead of going to the fund company. Over time, low costs make a huge difference in your wealth. Look for funds that track large, stable market indexes with strong long-term performance. Check the expense ratio, which tells you how much they charge yearly. Choose the one with lower fees and a reliable history. Here is the truth most people avoid. If you don't invest, you will always stay one step behind in life. Saving is not enough, because inflation quietly eats your money every year. Only investing builds financial freedom, and index funds make it easy for anyone to start. Create a habit of investing before spending, even if the amount is small. Set reminders, automate your SIP, and avoid checking the market too often. Your goal is to let the process run quietly in the background while your wealth grows. Compared to gold, real estate, or risky stocks, index funds offer stability with steady returns. They require almost no time or effort from you. They are perfect for beginners who want growth without stress. Whether you are a student, a salaried employee, or a business owner, you can start with any amount. Index funds don't judge your income and don't require huge savings. They only need your consistency and patience. Think of investing as planting a tree, not picking lottery tickets. You don't dig up the soil every day to check if the seed is growing. You water it regularly, give it time, and let nature do its job. You won't become rich in a month, but you will become stable in a few years. Index funds grow slowly but strongly, like steady steps climbing a mountain. The key is staying on the path and not giving up halfway. Don't stop investing when markets fall, because that is the best time to buy. Don't invest money you need next week or next month. Don't compare your returns daily, because wealth is built over years. Your money grows while you sleep, work, eat, and live your life. This is what financial freedom feels like, your investments supporting your future. Index funds make this possible even for complete beginners. Imagine having money for emergencies, education, travel, or retirement without stress. Imagine your savings multiplying quietly without you doing anything extra. This is the life long-term investors enjoy. Start small, stay consistent, and focus on long-term growth. Don't chase trends or get scared by temporary market drops. Index funds reward patience, discipline, and steady habits. Your financial future doesn't depend on luck, intelligence, or a high salary. It depends on one simple decision, whether you invest or not. And if you choose index funds, you are choosing the easiest and safest path to long-term wealth. If this video helped you understand index funds in a simple and clear way, make sure you hit the like button so more people can learn the same. Subscribe to the channel, because we break down complicated money topics into easy lessons that anyone can follow. And turn on the notification bell so you never miss a video that could change the way you handle your money. If you want step-by-step guides on saving, investing, and building wealth with a normal income, tell me in the comments what topic you want next. Your suggestion might become the next video on this channel. And remember, your journey to financial freedom starts with one small action you take today.